Joining us now for more on retail's big week is Brian Nagel. He's an analyst at Oppenheimer, and Jessica Ramirez, who's a retail research analyst at Jane Holley and Associates. And Jessica, let's start with you first, just to talk about Target and kind of dig in. There've been a lot of questions about what happened with retail sales, why those numbers for the industry numbers for the month were a little weaker than expected. But Brian Cornell today sounded like he is seeing the consumer. They're out there and they're strong. How do you kind of weigh all of this? What are you thinking about the future for retail, at least over the next month or so?
Good morning, and thank you for having me. We're still very excited that the consumer has actually come out after lockdown has eased, even though we're seeing the Delta variant be a bit of a threat. But we are still seeing consumers be cautious and take a new life as they begin to shop and really start connecting with other consumers out there. So we are seeing them shop. We are seeing some ready to wear. Again, the style that we're looking at, that people are shopping, is still looking at comfort as you do go back to the office, and it's a bit of a hybrid, and people still kind of easing into what this new norm looks like. But we are still seeing some excitement around some other categories. So footwear has been doing very, very well, and so has luxury. So I think that continues to give us hope into what the consumer is buying. And like Brian said today, the consumer is happy to be back out. I think as more retailers have come out of the pandemic with more exciting strategies that make shopping much more seamless for the consumer, is where that excitement continues to be. And we'll see those retailers again, like Target has done excellent this morning. So we'll continue to see that going forward.
The report was excellent, I'm sure, as you mentioned from that, but the street is selling the stock off a bit. It's down by about 1.8%. It was down by even more than that when the numbers first hit. Would you take this as a buying opportunity, or is this a reflection of how far the stock has come to this point?
Well, I think the stock, when we look at it year to date, it is up 40%. I think this is just a small moment in time. There is, we are looking at headwinds. It seems to be Target is completely mitigating through that, as some of the retailers are as well. So we're still very bullish on them.
Brian, let's talk a little bit about Lowe's, because they came out with very strong numbers, better than expected too. A little bit of a pullback in the same-store sales, but not by as much as the street had been anticipating. That stock, Lowe's shares, actually higher this morning. That's the one retail company that has reported numbers better than expected, but didn't get hit by the stock. Why do you think that is? Of course, there was a sell-off yesterday when they were kind of down because of what they saw from Home Depot.
Good morning, Becky. Look, I think that what's happening right now, and I know I was talking about Home Depot on your show yesterday, the data we're seeing is extraordinarily nuanced. So I watched your interview this morning in the deck with Brian Cornell, and he's talking about the strength in the consumer. I agree. But if I look at these Lowe's results, to answer your initial question, I think that the bottom line is that Lowe's results tracked better than expectations. And if you really dig through these results and you look at them on a stacked basis, they were stronger than the results that Home Depot reported yesterday. In other words, Lowe's business is holding up better. But look, I think the big theme here, I'm looking at Home Depot yesterday, Lowe's today, Target today, sales are slowing. It's just a matter of how we interpret that slowdown. And as I'm talking to our clients, I think the big question right now is everyone's looking at these reports, really what happens next? Do sales continue to slow further as these comparisons get more difficult, as the other guest is talking about some type of normalization in spending, or spending reverts back to pre-pandemic activities, or are we at the bottom? I think that's the big question right now. But that's a lot of the reasons that we're seeing this nuanced data and these funny reactions in some of these stocks, at least in the near term.